Hey guys, and welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. So in the meantime, I have made an Instagram page and I made a Twitter page that should be linked at the bottom of the screen. I'm hoping I figured out how to edit that. If not, but I'll figure it out. But if not, I've also listed them in my description below. Welcome back, everyone. All right, so a lot has happened since the beginning of 2022, the beginning of this vicious downtrend. This has been one of the worst starts of the year for stocks, as we've seen very clearly with the Nasdaq and QQQ. When we look at the S&P 500 on the 6-month, ever since the peak at the beginning of January, we saw lows of about 12.71%, as well as the Nasdaq QQQ. Since the highs back in December, I actually believe that the highs were back here in November, but you can't see the candlesticks on Google. But from peak to trough, roughly, we were down about 21%. So I drew this trend line, which aligns very well with the 50 EMA, this green line, and we also have the 20 EMA, which is this red line, and this is the 4-hour time frame for QQQ. So the first thing we notice with the downtrend is we're continuing to make lower highs. Every high is lower than the previous one. Likewise, every low is lower than the previous one as well. We notice that both moving averages are acting as a dynamic resistance, so every time we try to break through, the 50 EMA would reject. There'd be more supply than demand, and what happens when supply is higher than demand? We go downward. We actually tested it again in February, and then it also got rejected. The 20 EMA acting as resistance sometimes as well, the 50 EMA again, and then what happened after Jerome Powell spoke this week? Was this the low on March 14th? Because since then we were at 318, ending off the week at 351, breaking through the red line, the 20 EMA, the downtrend, the 50 EMA. That one we haven't gone above whatsoever really since the beginning of the year, and right now we're well above that. This is a very encouraging sign if you're in the market and you're going long. We also see a little bit of a Wyckoff pattern, so we went down, we reached this low over here, we started to trade sideways for a bit, we springed off this point over here again March 14th, and since then we've broken that downtrend. So a few possible scenarios here. Again, I'm just looking at the Nasdaq right now, the QQQ. We'll take a look at a few more names as well, including Bitcoin. We'll take a look at crypto. So assuming right now the bulls are in control, what would be healthy for this market if we pull back? We pull back to the 20 or the 50 EMA or this downtrend, and then continuing the uptrend, making higher highs and higher lows opposite to what we were seeing since the beginning of the year. We can also think of it as this way: elevator down and staircase up. And taking a look at the weekly time frame, so we see this week's candle engulfing the previous red candle. We're right at resistance at the 50 EMA, and we're also going to be approaching both the 50 and the 20 EMA. It'll be interesting to see if we do get some resistance, but again, if we do get a little bit of a pullback, we want to see something that could potentially go like this, breaking through both moving averages and continuing on higher. Again, I'm also giving the optimistic view of the markets going back up. It doesn't necessarily have to do that whatsoever. We could potentially be trading sideways and do something maybe a little bit like this. I'm not going to be here to speculate which one it's going to be. I have no idea how the market is going to react. I have no idea how the market is going to trade the next day or even the next hour. But what I do know is preparing myself whether it goes up, down, or sideways. And I forgot to mention, if you're new to the channel, welcome aboard. Hit that subscribe button. It helps the channel and I can continue growing the Unlimited community. When we take a look at the S&P 500, this one hasn't had as bad of a time, specifically because of oil, helping minimize the damage from the rest of the sectors. Looking at the heat map of the S&P 500, the 1-week performance, we see a ton of green. So again, a big rebound week. All the big tech names, Nvidia up almost 20%, Amazon 10%, Tesla 13%. However, if we take a look at the year-to-date performance, we see a not so great picture. We see most stocks not doing too well, except for maybe names like Berkshire and, of course, all the energy names going up like crazy, of course, because of the price of oil skyrocketing this year. All right, so one name I want to take a look at, Tesla, of course, a retail favorite. We're at very interesting key points right now. This is one of my favorite stocks to trade. In terms of it trading technically and with explosive moves, of course, I'm investing for it long term, but one of the better names to trade if you're a day trader or a swing trader. So we have a channel over here of resistance around $900, which we're around that point right now. We actually finished at $905, a little bit above it, which was where we gapped up from in October, and as well as resistance back in January of 2021. So right now we are at a point of interest as well as the bottom of this channel where we bounced off from just earlier this week, finding support as well in January and resistance in April of 2021. Some potential scenarios, we continue just mooning, Tesla does whatever it wants, it pulls back onto the moving averages and continues moving higher. Another scenario is that we find resistance at this 50 EMA, we start trading sideways potentially. Or in the worst case, we go down to the support line and we'll see what happens at that point. But right now we are in bullish context since we broke the downtrend since the beginning of the year. Not to mention, for the first time in a long time, we broke the 20 EMA, which we haven't done ever since January of this year. But even when we were above it, we didn't find any continued strength. Unlike this time where we closed above it and continued finding strength the next day, as well on increased volume. Looking at Bitcoin, we're a little bit in no man's land right now. We're at about $42,000 per Bitcoin. We are making higher lows, but that $46,000 mark still remains a very key resistance that once we break that, we could see a little bit more momentum come back and a little bit of FOMO come back into Bitcoin. But really this resistance needs to be broken in order to do that. Looking at Ethereum, again, a lot of overhead resistance. So we are in an uptrend making higher lows since the end of January, but that $3,000 mark and $3,300 mark being very strong overhead resistance. Until we break those, we can't get excited. So again, a little bit in no man's land, just like Bitcoin. And I've always been of this theory that Bitcoin and Ethereum are the heads of cryptocurrency. Whatever they do, the altcoins follow. So because right now Bitcoin is the biggest, I think that one is the biggest trigger for the rest of crypto. I mean, eventually maybe Ethereum will become bigger, but for the time being, until Bitcoin crushes through that $46,000 mark, I don't think we're really going anywhere. All right, and taking a look at oil on the daily time frame, so we see that we were respecting that 20 EMA from the beginning of 2022. Whenever we touch it, we bounce right off, exploding higher at the end of February, creating a very short-term bubble at about 130 at the peak, going down all the way to 93 very, very quickly. After just, 5 days, we went from the peak to the trough, and finding strong resistance on that 50 EMA again on the daily. So we opened at the 20 EMA, we closed at the 50, had a doji candle, and then we opened at the 50, closed above the 20, and now we're potentially finding strength above that 20 EMA. Is the oil trade done yet? Let me know in the comments below. Do you think oil is going to continue ripping on higher and making new highs, testing $130 a barrel, or are we going to fizzle out, trade sideways, or eventually go down? My opinion on oil long term, it's not going to do very well, but right now in the short term, with all the macroeconomics and what's been going on in the world, anything can happen truly. So it'll be interesting to see if the market can recover with oil doing its own thing, if the market's even going to recover, or whatever is going to happen. When we take a look at gold, same idea, that it's a flight to safety, what's going on around the world, buy. Similar to any kind of momentum when it comes to anything really. In the short term, sentiment and emotion rules. So at the end of January, we were just below 1,800 for every ounce of gold, reaching highs of about 2,068 per ounce of gold, and then very quickly falling back down to that 50 EMA, where we reached a low of 1,890, reaching a low of just about $1,900. And silver, similar idea. The end of January, beginning of February, ripping on higher, reaching highs of about $27 per ounce, falling to about $24.50, and sitting right now in no man's land. We're just waiting to see what happens. When we take a look at Apple on the daily, this one actually hasn't really broken its downtrend since the beginning of February. We're right at that 50 EMA, similar to the indices as well. So not the most encouraging out of Apple. We want to see it break the downtrend and eventually find support on it and then continue moving higher. If it can't do that, we're going to continue rejecting below those moving averages. If Apple rejects and goes down from here, we could trade sideways for a bit, but eventually we're going to have to decide and compress and either go up or we're going down. Microsoft looking a little bit healthier, breaking through the 50 EMA just by a little bit. So again, will it continue? Will it not? Microsoft is one of the most stable stocks out there in the market. It's one of the best stocks out there because it's backed up by one of the best businesses in the world, if not the best business in the world. We take a look at Google, very similar situation to Microsoft, backed up by one of the best businesses in the world. This stock really being all over, reaching highs of just over about $3,000, reaching recent lows of just around $2,500. This stock looking promising, closing above that 50 EMA. Amazon, so this one has been looking very strong of late as well, seeing very recent lows of about $2,670 at the beginning of this week at around $2,800, finishing off the week $400 more expensive at $3,200. What a comeback for Amazon stock. We see a clear double bottom from the beginning of February and mid-March. If we can break the neckline of about $3,300, this one is going to continue shooting up higher. especially with the news of the stock split. This one looking incredibly strong. We also noticed that we did have resistance back in the middle of February. So if we're able to break through that psychological point, this one may continue moving up even higher. And lastly, taking a look at NVIDIA, this one also finishing above the 50 EMA, opening and closing above it, nearing resistance of 265, 270. The next stop being 300. If we break that, then you have the all-time highs at about 350. And if you break that, you're at all-time highs, not out of the question for this kind of stock where it has very big drawdowns, where the drawdowns can be very violent. We went from 350 all the way down to about 200. But when this stock goes up, it goes up. We saw it very, very clearly in 2021. Alright, and that's the end of my video. Thank you very much for watching as always, guys. I know it's been a long time since my previous video, but I'm going to start producing more videos again, as well as my Instagram and my Twitter. Make sure you follow those ones, guys. Subscribe if you haven't. Like the video if you haven't, and I will see you in the next video.